All right, like I said, today is our last day with this system, and needless to say, I'm very happy by that. I just switched the broadcasting to a bit of a lower stream. Your quality probably won't be good in regards to the video, but the audio should be there for you, no problem there. Okay, so let me know if that's any better there for you. Um, all right. Yeah, you can't change the video resolution there. Yeah, I'm sending this on a lower resolution, just so we hopefully don't have any audio issues here. Okay. Yeah, really, there's not a ton the video that I'm going to show that and frankly, you kind of can probably bring up the charts in the same way that I have them as well. But let's talk FCX, right? And as I started FCX, easy entry, right? Whenever you get into a trade on a trend rider, on a vibe, or whatever system you're using, the entries are normally pretty set. The exits always become a little bit ambiguous, right? Because the market's different, market changes, news, other things come into play. And so we're dealing with FCX, and according to our original trade setup, there's no reason to get out of FCX. It's still above 36, right? Okay, so no reason to get out. Still hold into FCX and run with it. Okay, just if we looked at our initial setup and our initial exit price. But we're dealing with what today? We're dealing with a bearish engulfing. We're dealing with a little bit of a catalyst, though that catalyst is a little ambiguous. I think as I've kind of gone through things a little bit, this might just have more to do with some of the concerns over their operations in India than anything. But we'll never know why people decide to sell or why the stock is going down. Um, in normal years, a bearish engulfing like this, you're pretty comfortable that the stock's probably going to go lower. In 2013, that definitely wasn't the case for many. And you're also dealing today with options expiration, and so you sit there and you say, well, does the price have any significance at all? So let me kind of backtrack my thought process here and show you kind of what I'm thinking in regards to FCX. Okay. Let's start the first place. Okay, let's start with the FCX option itself. Okay, and let's start with the overall risk with the option. Okay, and the FCX option that we have is February. Okay, and it's in the money. The February 35, going for about $1.85 right now. So what? We're down 20 cents. I mean, we're not exactly talking about a big loss or anything here. But we're dealing with an option that is $1.85. Okay. And let me just write this out. Option value 185. Okay, and the real value of our option, okay, the 35s, right? Yep, 35s. Okay. The real value here is the current price of the stock, okay, minus 36.31 minus 35. So the real value is about $1.31. Okay, it's about $1.31 here. So we got $1.85 real option value, $1.31 real value. What does that mean? We have 64 cents subject simply to decay. Okay, this is kind of fake value, time value that could come into play, and that could erode us, especially with a 3-day weekend to come. So the first thing I want to know is what type of erosion am I looking at? So, we could see it a bunch of different ways, but let me go to one of the simpler, cboe.com. Okay. cboe.com, and I'm just going to come here to the tools and down to the option calculator. Okay. Option calculator, and I'm going to put in FCX and hit go. And let's get rid of that ad. And what's the current price of the stock right now? What was it? 36.31. Okay. So let's put in 36.31. and we are dealing on the 35 strike, right? Well, let's put the 35 strike, and we're dealing with the February expiration, 36 days away. And it tells us our call value should be about $1.89, right? It's bidding at 185 and it's asking at 189. So, we're in the ballpark there, right? Right now it's bidding at 187, asking at 191. So, we're definitely in the ballpark, okay? Well, what I'm concerned about is theta, okay? And theta here is the time decay each day. How much money do we lose on our option every day that we hold it? Okay. Well, theta is 0.0139. What does that mean? We lose about 1.4 pennies a day. Okay. So come Tuesday morning, we wake up and we're dealing with a 3-day weekend. Okay. So days to expiration. Let's just put in 32 here. Okay. Click on calculate. And our option that was $1.89, we're going to wake up to, and it'll be about $1.84. Given that the stock price is exactly the same. So are we dealing with a lot of time decay here on a percentage basis? No, not at all. Okay, not at all. A 10-cent move in the stock price will completely wipe out any potential time decay. Okay, so that's the first thing I would look at, especially holding over a 3-day weekend, because, if we were going to have major time decay, be a no-brainer. I'm out, gone, next. Okay? So, first thing, option, the option we got into, no big deal. We're not dealing with time decay very much. So, okay. No real decision based on that. Okay? So now I'm going to go look at the market. And I look at the market, okay, we're down 7 points, right? I mean, it's not that big a deal. We're talking about a market that's pretty much flat on the week, right? Down Monday, up Tuesday, up Wednesday, down Thursday, down Friday for a no gain, right? Completely flat overall. We have contracting bands. Am I going to wake up Tuesday morning expecting a huge move one way or the other in the market? No. I mean, chances of us having a big move, we don't have any major catalysts coming on board. You always have some geopolitical risk, right? Especially over a 3-day weekend. But, even come Tuesday, there's no real data on board. Wednesday, no real data. Thursday, just a little bit. But, we're just dealing with earnings. It's not like we're dealing with a whole bunch of news out there. So I don't see a huge market risk overall. Okay? Not a big market risk here. And so, okay. What do I say? Well, in the challenge, right? Bank of America, I'm not getting out of, right? We're continuing to hold Bank of America. Notice they're going to pin it here at $17 here on expiration. This is an expiration phenomena, but overall, it's not that it's there's nothing bearish here. I already decided holding Bank of America. So if I hold FCX, I have no cash come Tuesday morning. So what would I have to do? I'd have to pop out of FCX and get into something else if I liked it. Well, there are a lot of other trades out there that I look at and I say these are close, but no cigar. They're really close and they're very interesting. I love this UPS setup. Absolutely love the UPS setup. I know Josh talked about UPS a little bit here today, but the price action here on UPS combined with the news, you basically have a short-term negative catalyst in the midst of a long-term positive catalyst. Love the price action there. You take something like FedEx, it gets that next move above the 7. You're talking about a lot of stocks that are very close to some really interesting buy signals. Halliburton, okay, very close to some interesting buy signals, but just not quite there yet. Okay, not quite there yet. So nothing I'd want to really rush after here, but come Tuesday mid-morning, there could be some really, really interesting upside entries. Okay, so I have to say, well, do I want to free up the cash, overall, and free up the cash to be able to get into something else? Slavic, great question. China GDP on Monday, will that move the markets? Yeah, it can. Generally, the China GDP, GDP isn't the biggest mover of the China data. GDP is a really nice number for the news, but GDP looks at the economic performance in the past. It's a real kind of rear view mirror, a number for the history books, especially with as many revisions and edits that they give to the data. Some of the manufacturing data, PMI data, consumer data is more market moving overall employment data than is GDP. And so very rarely will I ever look at a GDP release and say that could be a big catalyst for the markets. I know if the markets move big on Tuesday, the news will blame it on the Chinese GDP, but that's probably not the underlying cause there. Okay. But great question. Fantastic question. I look and there's nothing that I really want in right here that I say, hey, I got to get my hands on it right here. I know Apple's kind of close, but just the price action on it today, it's had some big volumes and hasn't been able to get any sort of sustained bounce. So I just look at it and I say, yeah, nothing there yet. And so the question comes down to, I don't want my money for anything else. I'm still bullish on FCX. I mean, the daily patterns, the only concern I have is this bearish engulfing. So what's my risk of holding it over the weekend? Okay, what's my risk? And so let's go take a look. If we say, let's say that FCX gaps below 36, and we wake up and FCX is at 35.90, okay? We're dealing with 32 days to expiration. We already marked that off. Our option's going to go from a buck 90 right now to a buck 55. All right, so we'll lose about 35 cents here on on our contracts, on our 7 contracts. From a dollar standpoint, that's not a huge amount of risk. Okay, so I'm not, to hold this over the weekend, we're not exactly talking about a ton of risk overall. And so my inclination is to say, as long as FCX doesn't fall off a cliff here, there's no real great reason not to hold it here. Okay, does it mean that Tuesday morning I got to be very vigilant, very much on top of FCX? Absolutely, but I don't have a ton of risk to hold it over the weekend. I still have some nice upside potential. I still could hold it over earnings, though I don't think that would be the best play. So, I'd be looking to get out Tuesday, hopefully somewhere around the 37 mark, and hopefully we can get that day before earnings rally and go with that. And if we don't, my worst case is, we're down about $250 more dollars, and we exit out of the trade with a $300 to $400 loss, and we move on and pop into the next trade. Okay. All right. So I'm gonna hold FCX. Okay. I'm gonna hold FCX for that. Would I argue anybody to exit? No. I absolutely just wouldn't argue anybody who wants to exit FCX. These bearish engulfings can be a little bit scary. Is this a bearish engulfing where we get a strong bounce up the next day? Is this a bearish engulfing where we get continued lower? I don't know that you can say too much about this bearish engulfing overall. I'd be more concerned with it if we saw the selling in the last hour of the day, but most of the selling's been midday here with FCX. So, we definitely have reasons to sell, reasons to stay in. Our original parameters aren't broken, and so that's why I'm going to make that decision to go ahead and hold FCX here. Okay, Bank of America. Bank of America, this was a decision that we made after earnings that we were going to look to hold this for several weeks, and we'll use our FCX money to kind of get in, get out of things pretty quickly. I was asked what I thought about the price action on Bank of America, and I'm actually pretty pleased with the price action overall. My concern was that they were going to bust 17 with it, and that we would end up filling this earnings gap, which is still a potential. But the longer we stay here at 17, if we even get a 10-cent gap higher on Bank of America come Tuesday morning, we're off to the races to 18. And I just think that the upside potential is so much greater than the downside risk here. Yeah, may it break 1680 or something, and we have to get out. Yeah, chalk the trade up as a draw, sure. But this is one where I think that upside is just so much greater than the downside risk that really would like to keep a hold of that as we go forward. Okay. No, worry board. FCX earnings. FCX earnings are Wednesday the 22nd. Okay, Wednesday the 22nd. Okay. Now I checked that with 3 sources, but I just checked on Thinkorswim here, and it looks like that's not the case here. Okay, I'm just doing a quick double check. I know 21 is out there on some things, but I was pretty darn sure it was 22 with the sources I looked at. Let me go to you just go to the company site here, and generally you can come into the investor center and you can kind of get the when the news releases are. Let's see here, they're all a little bit different. That doesn't have the past here. All right, here we go. Yeah, 122. Okay, 122. So Wednesday morning, they'll release their earnings. They'll have their conference call. So we're not committed through the earnings. Okay. We're not committed to the earnings. Yeah, one of the reasons why different publications will have different earnings times is because a lot of them will try to project when the earnings are going to be based on when the past earnings can be. But sometimes the company will come out a few weeks before and change that earnings date by a day or two, and so that will be why you see a little discrepancy there. It used to be that Finviz, I was pretty confident 100% of the time they were right. Last earnings period, we saw a few numbers that weren't correct, and so to get some other outlets or other sources with that, and generally the best source is just the company homepage, the website for the company there. Okay. All right. Now Carl is not doing his top three here today, and we talked about that, and I'm sure the note will go out here, but the reason he's not doing it, yeah, so there are a few signals. Are there a couple things that are very interesting? Things like Expedia and whatnot. Are there some interesting things? Sure. But we're dealing with options expiration on probably the worst option expiration of the year in regards to this January expiration. I mean, we're dealing with options expiring that have been around for 2 to 3 years. And so some of the action that we're seeing here today overall in the market isn't necessarily indicative of the real price action and the underlying buying and selling that we're going to expect to see as we go forward. And so it becomes a very tough day to kind of look at something and say, well, we gotta, we have an upside entry point here, maybe on Exxon, but it's just very, very tough to trust being on this options expiration, especially ahead of a 3-day weekend. So he decided not to release a top three simply because he wouldn't be getting into anything right here. Okay. Martin, isn't there some risk with the confusion about earnings date for FCX to expect some unexpected move on Tuesday? Not necessarily. When you're talking about the major players out there, okay, that are owning the stock on FCX, that have dedicated full-time analysts with FCX. There's not confusion about the earnings date. When you're talking about free websites out there, like Yahoo Finance or Google Finance or FinViz or some of those other things that you're more just home traders use. That's where there's a little confusion. But the home trader, they're not gonna make any big splashes here. Okay. I started reading some of the some of the different stuff out there on digging in even more a little bit on some of the Freeport stuff last night, and it's just kind of interesting what's out there. There's some really bullishness. There's some real heavy bullishness ahead of earnings, and there's some real heavy bearishness ahead of earnings. It's a pretty mixed bag out there from what I see here. Okay. Yeah, thanks, Richard. Exactly. Okay. All right. So we're looking at a market overall here, selling off a little bit into the close. Okay, selling off into the close. It's down about 7 points right here. It's not a major kind of bloodbath overall. We still see some green on the board, but we don't see any stocks that are down huge multiple percentages that didn't have catalysts to go with them. This just looks like a typical option expiration close. It's nothing I would want to say. If you're in something, let's say you're into something like Colgate. Is there any change in the position? No, not at all. Okay, not at all there. Worrybird, you bring up a good point. FCX has huge open interest at 36. Yeah, will they pin it at 36 today? Yeah, I mean, is there that risk? I mean, you see them dropping it into the close here, towards that 36 level. And our best, look, from a bullish hope standpoint, you're looking at saying, yeah, I hope they pin it at 36, because then, all of that, that when they pin something, you kind of have a little discrepancy in buying and selling pressure, and generally that will release and go the other way when the stock opens the next day. I'm pretty comfortable that we'll see FCX open higher on Tuesday. Pretty comfortable with that. I think the odds are strongly in our favor. My concern is, do we open higher and then start to sell off? And that's where I'd be concerned. And that's why, Tuesday morning we're going to have to, really pay attention closely. Yeah, PW, what does pin it mean? Pin is a term that investors use to say that a stock is going to close at a certain level. So look at Bank of America at 17. And when you look at the options, 17 is a strike price. Okay, so think about yourself not as an owner of Bank of America, but as a market maker for Bank of America. So you're basically in there with Bank of America, and you are providing. Okay, let's pull it up here. Okay, and let's just come in here to these January 17s. And I'm going to bring up the calls and the puts here. Okay. And what you've been doing is you've been writing these contracts. So somebody wants to buy the calls, you're selling them the calls, right? Okay. And somebody wants to buy the puts, you're selling them the put. So you're the market maker, right? You're kind of naked on some of these positions. Okay. Well, it matters whether this option value is worth 10 cents, 20 cents, 50 cents, because that's going to affect your profit overall as a market maker. And so the market maker has incentive to drive the price of the stock as close to a major strike price as possible, so that more of the option values get sucked out. Okay, and so a lot of times they'll use this term pin it on options expiration to really refer to the fact that the market maker is trying to get that stock to close as close to the strike price as possible. Now, can the market maker always do that? Okay, no, they can't. I mean, sometimes there's other buying and selling pressure that's going on that can change that, right? But in general, that's kind of the theory about what is going on out there. There is some evidence to suggest that it does happen, but it's not something that is so common that you want to look and say, well, we're going to expire. What's the closest strike price? Where's all the open interest? That's where the stock has to go. I mean, if you were to take Apple earlier today and say, okay, where are they going to pin Apple? Where's the most open interest in regards to Apple? You're looking, man, they could pin that at 550. Look at all these contracts, almost 40,000 on the 550 calls, 32,000 on the 550 puts. Are they going to pin it around 550? Well, no, the stock's down to 540. Okay, so to expect a pin at a certain number, little tougher. Bank of America was just a little bit easier since the earnings. We didn't really see the big buy right after earnings, and every little escape off of this 17 mark has pretty much been sold, and today on really light volume. Okay, so Vegas, thanks for reposting that. I appreciate that. That article talks a little bit about the pinning. Um, there's several things out there. That's one of the better ones overall. Okay. Alrighty, so we're going to go into the weekend holding Bank of America FCX. If you're just hopping on, wondering why we're holding FCX, I will post this recording and kind of go through the process. Like I said, I wouldn't argue anybody who wants to get out of FCX here. I don't think it's going to be a make or break trade for the challenge. Means it moves below 36 come Monday morning. Pop on out. It's not going to break the challenge, and if it pushes up to 37 in the morning, and we pop out ahead of earnings, it's not going to make the challenge. It's not in a make or break critical area, but it's one where just trying to make the best decision here based on the circumstances here today, and so going to run here with Freeport McMoran over the weekend. All right. Well, remember, markets are closed. Bond markets closed. We're not dealing with just stocks that are closed on Monday. We're dealing with pretty much a market-wide shutdown. International markets obviously are open. Enjoy your long weekend. In the meantime, you have any questions, please let us know. Happy to help you out. And we'll talk to you later. Take care.